Well, I hope you're all doing well, and we had a very interesting day yesterday. There was 3 stories that I wanted to cover on YouTube, so I thought, let's just stick them all in one big video. And there was a few things yesterday that came out that shocked me. I was a little bit like, I didn't see that coming, and we'll go through them things today. So I hope you enjoyed the video and smash the like button as well if you could. So first of all, let's start with this one. This one got the most coverage, I would say, on the YouTube scene, so I'll keep this one nice and brief, but it was a stock that I own, which is Alibaba. Alibaba had a fantastic day yesterday. The stock was up 14%. Now I'm thinking, is it probably going to give some of it back in the next few days, because an unnatural jump like that is a little bit crazy. But there was a lot of news, well, there was a bit of news, or one piece of news that was out there that everybody liked, and it was this. Alibaba is to split into 6 units and explore IPOs, and the shares were up big after this. So I didn't see this coming. I thought potentially there'll be a point where Alibaba could potentially spin the cloud off, but I never saw them splitting up into 6 different companies like this. So this was something I was not expecting at all. Now obviously the stock was up 14%, so we can tell the market really did like this news. Really quickly, what are those units? Well, the units are actually listed down here. So you got the cloud, you got the Tebeo, Tmall commerce, that's one of the biggest part of the business, the commerce parts of the business. Local services group, which is like Alibaba's food delivery. Caniano Smart Logistics. We've got global digital commerce, which is the likes of Alibaba, AliExpress, and then we have the digital media and entertainment group. So there's some big parts of the companies here, especially obviously Tmall is the big part of the company, but a lot of people do really like the cloud part of the business. So I think a lot of people will be interested in that if they do split that off, which I would expect to be the first part of the company to get split off, because that's one that I thought would get split off. So yeah, obviously they're splitting these off at the moment, and my initial thoughts was this is probably a very good move from Alibaba. The reason why I think this is a good move is because most of the company nowadays gets valued off the Tmall position, because our company, because that is the biggest part of the company and it is the most profitable part of the company. And when you get to this stage, everyone kind of values you off profit. But when cloud potentially is an unprofitable part of the business and you split that off, and then potentially they do get to a profitable part of the business, that could be worth a big chunk on its own. So what I think Alibaba is thinking here at the moment is that at the moment we are just getting valued off Tmall, when all of these parts of the companies should be valued more than what it is right now. And you can see Alibaba at the moment, they're trying to think, well, how do we kind of get out of this situation where we feel our stock is valued way too low? Well, we can get more individual value for these companies by splitting them up. The other thing that I think Alibaba is considering is the regulation. Obviously, we know Alibaba has been under tons of pressure because of the monopoly and China cracking down on monopolies. So I think this would suit the Chinese government a little bit more to break them all down. Be interesting to see the likes of other companies as well. Potentially, will they follow that sort of? If they see Alibaba does very well, if they see that a lot of these parts of the company get split up, and the value when they're split up is so much more than the company individually, I wonder if a few other companies like Facebook or Meta look at that and go, well, let's split Instagram off, or let's split so-and-so off. I wonder if a few other companies will consider doing it if they see success from Alibaba. So this could be an interesting thing in the next 12 months to see how much that affects other companies. So yeah, I think they're looking at looking more value for having them individually, and also I think the consideration of the antitrust kind of lockdowns they're having on would suit the Chinese regulators a little bit more. So I can understand this move. I think it's a very, very good move from the company. I think it's a good idea to split them up. Personally, for me, I don't think if they were all to IPO individually, I don't know if I would own all 6 of them. I'm not sure exactly which ones yet I would consider still holding. I definitely would be more interested in the cloud platform. Potentially, I'll see what I feel about the Tmall part of the business. So we'll see what happens there, but we'll leave that to a little bit of a later date when we get a bit more further down the line. The only thing I thought was quite interesting is the position around the Ant Group. There was no mention of the Ant Group in here, so obviously that's a situation they'll have to deal with as well at some point. But yeah, overall, I thought this was a good move. Unlock that value a little bit more, help the regulation from the Chinese government a little bit more. I think all of them individually could be worth more than what the company's valued at right now, and clearly Alibaba has to change it up. The other thing as well is, like, sometimes the growth, when you get so big, there's only, you can reach saturation and your growth starts slowing down. So how can Alibaba show that potentially, let's say the cloud the cloud revenue has been a bit weak recently, but if the cloud revenue goes back to good growth, and then potentially, rather than getting sunk down by the other parts of the platform, or if the Tmall part of platform does slower growth, rather not get hidden away there, you might get valued a lot more because you've got the higher growth as well. That's something to kind of consider. So yeah, we'll see how this progresses through the year, but my original thoughts was it's a good move, and I can see why the market liked it as well. So we'll keep an eye on that one. The second part of the news, or the second story this week today was Walgreens. Walgreens reported their earnings. The stock was up 2.6%. It was actually up a little bit more at the time. And as you guys know, I'm looking at this one, I'm quite interested in this one. I'm looking at it as a bit of a turnaround play on the share price, and I'm also looking at a dividend yield getting towards 6%. So I was waiting to see if they can still develop good financials on this turnaround plan, and they delivered. If you look at the EPS was a beat. You look at the revenue was a beat, and it was a decent beat as well, with the stock, the business growing 7.6%. You can see here the company said that they're going to maintain the full year adjusted EPS guidance, which is higher than what the consensus was, $4.45 to $4.65 versus the consensus of $4.50. So that's really good, and they said they're still seeing good growth going forward. And I think when you look at the business, the turnaround, how they're strengthening up the balance sheet, selling off a few of the positions, you've got the clinic health kind of coming into this business now. The turnaround play for this business actually looks quite interesting at the moment. So yeah, I'm watching this one very closely, and at 7 forward times earnings, it's definitely got my attention with that dividend yield and the potential turnaround presence. The only thing I'm going to do now is I've not had time yet to go fully into the earnings and just go through everything. I've had a quick scan and I was impressed with everything that I saw, but I want to just commit maybe an hour when I've got time just to go through everything, just to make sure I'm happy with everything. If I'm happy with everything, how I feel right now, I'm not going to lie, I'm probably going to potentially open up a position in this stock in the next month, because I think that the turnaround play is doing very well at the moment, and I'm quite happy where everything is at. So yeah, I'm watching this one incredibly close right now, and I needed another earnings just to see if everything was going really well, and it is. So I'm really considering this one at the moment. So we'll keep an eye on that one. And the last one was Lovesac. So Lovesac brought their earnings out. The stock actually at the time was up close to nearly like 20% up. Now it did give some of that back through the day, and it did end up 12% up, but it is at $27. So obviously still a good jump on the day. Obviously one that I've been buying recently. I've been trying to buy it if I can around that $21 range. So obviously doing okay right now. 13 times earnings at the moment, and if we have a look at their earnings, they did EPS, which was basically missed by 0.01, so that's not a major issue. Revenue was a beat by 19 million. This was a really good beat on the revenue, so that was really strong. The numbers in this quarter was very good, so we like that. The growth was up 21% year over year. I mean, that's crazy. Consider that you're a high-end furniture business, and you've just put in 21% year over year revenue, and you beat by that much in this is right now supposed to be Lovesac's like worst couple of months. Like, this is supposed to be the time where all the recession fears, people not spending as much money, this is when Lovesac was supposed to be doing terrible earnings, and you look at the earnings and they're still doing okay, which is the crazy thing. And you get in this company 13 times earnings at the moment, which is absolutely crazy. So the numbers from this quarter was actually really good. Going through what was released, they still look pretty strong, to be fair. They said they were going to open up 30 new stores, I believe it was. The only thing that I was looking at was the guidance. But actually, before we get onto the guidance, very quickly as well as the gross margins, they said they're going to see a lot of improvement in gross margins because of freight coming down, the costs coming down as well. So I think that's a theme that we might see a lot of companies at the moment actually mention, is that they're actually expecting a lot of better margins because of the freight costs coming down. The only little thing that I looked at is the difference between the outlook in Q1 to the end of the year. I was like, there's a big gap here, the difference. So if you have a quick look, let's go with adjusted EBITDA. So adjusted EBITDA was 55 million to 66 million. Net income in the range of 30 million to 36 million. And you'll be able to see here that the net sales is in the range of 740 million. Now, if you actually look at what analysts were forecasting, the average estimate at the moment is currently 690. It's a bit weird, but this is for the financial year 2024 for Lovesac, because of how they report. So you can see it was, the average estimate is 692 million. So you can see here they're expecting to be above what the current estimate is. So obviously that's really good. And you see here that the diluted per common share in the range of $1.83 to $2.24. So same again, that's about right with estimates. So a little bit on the higher end still. So this is a good forecast that we're giving. The only thing that surprised me is when you look at the actual first quarter guidance. The first quarter guidance of a loss of 0.36 and 0.37 is currently more than what is expected. They did mention why that was, which I can't see where it is here at the moment. But if we have a look at the net sales would be in the range of 133 million to 136 million. And at the moment, you'd be able to see that they are, analysts are expecting 134 million. So that's about bang on what analysts were actually expecting at the moment. So pretty much in line there. So I mean, obviously Q1's a weak period for Lovesac because of the seasonality of it. But I was looking there, like that's a major jump up to these targets at the end of the year for the spin around of the business here. They're expecting a good Q2, Q3, and Q4. So I was looking at this one a little bit thinking, are these too optimistic targets for the end of the year potentially? So I don't know. We'll see what happens. Obviously, if they hit these numbers at the back end of the year, this stock is incredibly cheap. The only thing is can they hit them? You know, the Q1 here, as you can see, is obviously a weaker quarter, but the back end of the year looks incredibly strong. So I'll be honest with you, I looked at this stock and thought, well, is there a potential chance that I just take my profit now and then I wait until they report these earnings and see if they, you know, what guidance they give and then buy back? And then I kind of got to the point of view where I was like, you know, it would be nice to take the profit off the table, but is that too much short-term mentality? You know, would I get to the point there where I'm kind of, you know, gambling on short-term prices, which obviously I never do as a long-term investor, and you know, potentially we have a big rally from now until June time, whenever the next report their earnings. July time we get to the summer and stocks start rallying because people realise we're going to have a good back end of the year, and I sell out on my position and go, why did I sell that? Because obviously this company doing these numbers at, you know, 13 times earnings, whatever it was absolutely ridiculous, and maybe that would prove to be a bad move. So rather than gambling what it's going to be in the short term, do I just hold it through? And then there was the other part of me thinking, well, should we wait until they actually give a closer forecasting, like for the next quarter, for example, you know, the second quarter, see if they're still forecasting these numbers or if the financial situation's deteriorated. So I was kind of weighing that up as well. So yeah, I mean, obviously overall, Lovesac, I thought Q4 was good. Q1 was a bit of a weaker guidance, but the rest of the year looks really strong. So yeah, I had mixed views on it. I mean, I understand why the share price did really well on these earnings, but there was that part of me just thinking about that situation as well at the moment. But at the moment, I'm deciding to still hold through because I think if they do hit these numbers in 2024, it's a very good valuation right now for this business. And this is, you know, you got to remember this is in a bad financial time period that they're doing these numbers as well. So that's the scary part. So yeah, that's where I'm at with Lovesac anyway. So yeah, overall those are the 3 stories that I wanted to just talk about today anyway. So I hope you enjoyed the video. And we've got S4 Capital in, well, actually by the time I get this video up, you might know the actual results, but we've got S4 Capital reporting in a couple of hours anyway. So we'll see what them guys do as well. So catch you in a bit, guys. Thanks for watching.